In this video I will teach you how to place a buy pending order. To do that you need to go to new order, choose again the right symbol if you are not in the right chart. If you are, it should be automatically here. The volume according to your account size, and then from the type choose pending order. And in this case, when we are buying, we will use buy stop, not buy limit, but buy stop only in the strategies I will teach during the course. So buy stop, and you need to choose the price. And now please pay attention, because it will be a bit different than what we were doing with the sell orders. Because the sell orders, as you can remember from the previous video, we were placing at the lowest price of the candle, and now we are doing opposite. So we'll be placing at the highest price. So let's say we want to sell above the stop, so we need to check the height, which is 16,298.50 for this particular candle. But we are not gonna use only this number. We need to add spread into that. So let's say the spread is 5 points, so we will add 5 to the ends, so to 98. So we will have 16,303.50 in that case. So that's what we need to do. 600. Boom. So once again, you need to check the highest price of this candle if you want to enter the market above this candle. But to do that, you need to add spread in that case. With the sell orders, you just do it the same at the low price. You don't change anything. But here you will need to add the spread. And how to know how much is the spread, I will show you in a second. For now, we've got the right price. We need to put the stop loss, let's say 30 again, so that would be 2,773, and take profit. Let's leave it 0 at the time. And there's another important information that I forgot to mention in the sell video. Let me do it now. The bottom of this chart, once you've got selected pending order, you can see that open price you set must be different from market price, but at least 600 points. So that means actually not 600 but 6 points, because we don't count these 2 digits. That's just fractals of the points. So it's the same as here. These 2 zeros represent these 2 digits here. So we need to be 6 points above the actual price. So let's say now the price is 61, 60, let's say. So 66.50 would be the minimum for our order. So it has to be minimum 6 points away from the actual price, in both ways, either it's sell or if it's buy. And we press place. Order is being processed by the server. And it's being processed by the server. And there we go. So we've got our order. We can check if everything is okay. The price, the stop loss, we won't be using take profit in that case. We'll close it manually, and we can see that this is the entry level, and this is our stop loss, 30 points. It says 3,000, but again 2 digits in this case. Okay, it depends on the broker. Some brokers might have it different, so pay attention to that. With this particular one, it says 3,000. Okay, and now I show you how to find out what's the spread. So if you press this little triangle over here, you will see the prices, or as well, if you want to see that, you can right click on the chart, one-click trading, and you will see the prices sell and buy. So the spread is the difference between these two prices. So we've got 56 and 61, that's 5 points difference. That's why I was adding 5 points to the price. And another way to find out what's the spread, you can go to Market Watch, go to your symbol. I mean, no, that's not the one, that's the Dow Jones. You right click on that and you select spread. And now you will see on the side over here you've got new information which shows you the spread, and it says 500, so it's 5 points. You can see Euro USD, you've got 18, 19, 20, but we don't count the last zero, so that would be 1.7, 1.8 to 2.0. The same with DAX, it's 2 points, and that's how it looks like. So you can find the spread through different ways, and I will explain you as well why you need to add the spread. If you right click on the chart, go to properties and go to common, you can select show ask price. So now you've got the bid price and you can see the ask price as well. So that's the price for buying. And now you can see that we've got another line which is red. It's 5 points higher than the gray line, and that's why we need to add the spread, because this line will be at the top of this candle first, and it would trigger, I mean, this red line is gonna trigger our trade. But what we see here, these prices are not the prices when the red line was, but these prices are where the gray line was. So when the gray line goes to the top of this candle, the red line is gonna be already 5 points above. So if we want to enter the trade exactly at the same point as this green candle finished, we cannot enter it at the same point, because it's gonna be 5 points before, because the red line will come here, then it will trigger our order, but the gray line will be still 5 points away, and the price might just go back and never go to the top as we predicted. So that's the reason. And when we are selling, as you can see now, it's opposite. So the green line, which is indicating all the prices, is the first one. So this is the line that is gonna reach the bottom of this red candle and then trigger our order. So we don't need to worry about the spread, because the red line is behind and it's not doing anything in that case. It's just showing us that when the red line will come to the bottom of the red candle, then we will be at 0. So after 5 points, after the spread, we will be at 0, and then we start making money. So that's how it looks like. I will answer all the other questions. I know that it might be quite complicated, so that's why we are doing this workshop, and you can ask me all the questions and we will go through that again.